Hey guys, what's up? Welcome back to another training video. Today we are going to talk about patience and why you need it, guys. It's so important to have patience because most of the time the market's trying to trick you. It's trying to tell you it's going one way. It's starting to show bearish signs. It's starting to show bullish signs, but you don't wait long enough for it to really show you which way it's going to go, give you confirmation, and then wait for that breakout and retest. That's what you should be doing, especially if you guys are beginners or even intermediate traders. That breakout and retest is the easiest way to do it. Trying to catch wicks and trying to catch the bottoms is very difficult, and you need to know what you're doing. So let's talk about that right now. I just thought about it. There was a cool little situation. In my video the other day, somebody commented in my inbox and said, I thought it was showing bearish signs, and I thought that was funny because I didn't say it was bearish. I said it was showing bearish signs. So I thought that was pretty cool reason to do this video. So here, we're going to look at Bitcoin like we always do. So right here you can see we've got a pretty good run up, a pretty good rally. We've got this reversal candle we talked about weeks ago. And then we had a run up, run down, manipulation, spike. It's always got to spike down. You always got to be prepared for this. No matter what you're doing with Bitcoin, you got to be prepared for that right there. And we had a nice run up for about 10 days. Okay, and then in this purple region here, we show three dojis. Okay, this is spinning top, kind of doji, and then spinning. This is another doji here. Okay, these are all like hammers, reverse candles. Everybody's got different names for them, but these are all reversal signals. You start seeing these, this means exhaustion. This means inconsistencies in the market. Basically, a lot of buyers and a lot of sellers. They're evening out on both sides. Okay, and that is at resistance. Okay, but just because it's showing these signs doesn't mean it's going to go that way. What I mean is this isn't our top out. Yeah, we've had 1, 2, 3, 4 runs, 5, 6, 7 runs into this area, but this is our top. So it wouldn't, surprise me at all if we ran up and touched this, because this is our latest high. I mean, for the last 6 months, 5 months, this is the highest we've been. Okay, this point right here. And now we've broken that. We always talk about waiting for things, okay? We talked about these candles here, and then we wanted to wait for this candle here to see what was going to transpire. Now, this broke up, okay? If we break it down into the lower time frames, you're going to see this candle break down and touch this zone. Nothing's perfect. Nothing has to be perfect. It doesn't have to touch 53.50, which is actually more right there. Actually, a little bit more than that. So 53.50. So it doesn't have to exactly touch it. It touched this zone, and then what did it do? It broke up and passed this area. This is what we were going over today. So the point is, just because this is showing bearish signs doesn't mean anything. We're not going to enter a long at a high. You enter shorts at the highest point and longs at the lowest point. This is not the lowest point. When we go through these breakdowns, we're giving you guys strategies on what we think is going to happen next. We're not telling you because we're here and we think it's going to end up here to go long. This is not an entry. Okay? Up and down is an entry. Up and down is an entry. So today we told you we might retest some of these levels. We might have to come down, retest this level, and go back up. Or we also said we might have to come, once we broke through this, we said we have to come down, retest this level, maybe ultimately come down and retest 43.50 because these areas need to be retested. This is a slight retest here, and this one here is the one I want to talk about because you had to wait. I told you guys, once it breaks through, once it breaks through here, it breaks up, here's the three dojis, so it broke up, retested two nice candles here, broke up, came down, look, retested, almost pinpoint, well actually it was 45.85 that we talked about. So $2 past it. But look, you're right in the zone, you're right in the middle of the zone here, retest, retest after a run up. You see these dojis, three spinning tops and a doji, back down to retest, and now we've got the entry here, guys. If you're going to catch places like this, if you know you want to go long here, then you pay attention in these areas, or you set these areas up for your buys, okay? Because now we're here, and now we can attempt to go higher to 5,700, 5,800, these areas. But guys, make sure you're patient, okay? Wait for the breakout. If you're here and you think it's going to go long, wait for it to go, because what'll happen? Boom, it goes down. Okay, you're ultimately right, but it had to retest down first. Okay, because what? We got dojis showing bearish signs. Okay, just because it's showing bearish signs doesn't mean it's going to keep bearish. It bounced down, showed a bunch of other reversal signals here, especially this candle here, and then it bounced back up, ultimately where you thought it was going to go. But this now told you it's going up, breaks through, comes back, retest. These are your entry zones. This is an entry zone. Even here would be a good entry zone. On the way down, then it starts showing reversal patterns. Then you go. On the way up, you wait for it to come back down, and then you go. You need to have that patience. Let it show you where it's going to go. Let it come back down. Let it retest, and then you enter. Let it show you where it's going to go. This is our last level. Let it retest, and then enter. Yeah, guys, it could spike down. But we have a good chance because it's showing reversal. 1, 2, testing the MA. Everything's still pointing up. Nice distance between the MAs. Everything's looking good for this to keep going long. And we go with the trend. The trend is up. We enter on the rallies back. We enter on the corrections. If the trend is up, we enter when it's going down. We're not entering when it's going up. Vice versa. If the trend is down, we're entering when it's going up, not when it's going down. So train your mind and not freak out when the market's going the opposite way you want, because it's giving you a better entry and it's going to take time. It could take, when I see a setup in Forex, for example, it might take 2 weeks for that setup to play out, to get to the area that I want to buy or sell in. And then when it happens, it really, really pays off. But just because I found it today doesn't mean it's going to happen even this week. I keep it in my notes. I keep it on my things to remember, and I watch for these areas to get touched. For example, 4,200 has been on my mind for a very long time. I got my my mindset on 4,200 being touched at some point back down here where we had big resistance. 4,900, another area that showed a lot of resistance. These areas got to get touched. We've got to see a big, big correction. But with Bitcoin, seeing what happened last year, this thing could blast off to the stratosphere, and I wouldn't be mad about it. Does it show market structure? Absolutely not. But hey, this is cryptocurrency, and you got to change the way. Oh, that's not cryptocurrency. That is oil. And you need to change the way you do things and adapt to the market, guys. But my whole point is, stop trying to catch wicks. Stop trying to catch, all these crazy entries on the way up. Stop entering in the tops of things because you think it's going to keep going. Wait for the market to come back to you. I don't care how long it takes. Have patience and trade safe. See you guys in the next training episode. Hope you enjoyed our new training series.